The producer price index, known in your hood as the PPI, that measures the average change in the price producers receive for their goods here. That index came in hotter than expected in April, and the reading slightly tempered by a downward revision in March. But still, the numbers throw another wrench into the Fed's thinking about the timing of rate cuts, and consumers aren't feeling too good about where inflation is heading. A new survey from the Federal Reserve Bank of New York finding Americans raising both their short-term and long-term expectations around inflation. Consumers see inflation increasing to 3.3% from 3% on a one-year time horizon and 2.8% from 2.6% on the 5-year time horizon. So how can you protect your money against the present threat of inflation? Joining me now in studio with some tips, we've got Lazetta Braxton, who is the Lazetta and Associates founder and CEO. Great to have you here in studio with us.
Great to be here today, Brad.
Let's talk about this a little bit more, because a lot of people are trying to figure out, especially as they hear some of the stats like that from surveys conducted by the New York Fed, trying to understand how they combat money erosion from inflation. What are you telling clients right now?
Well, let's look at this from two perspectives. One is thinking about what you're paying for, the price of goods and services, so you're actually getting less but have to pay more. And the other side we have to look at too is how do you grow your money, thinking about right now and the future, because inflation, as we know, is going to work its course now and in the future. So if you're looking at those two aspects, I want to start focusing on the investment side.
Sure. And so where in the investment side then can people begin?
Let's start with savings. Fundamental, a lot of people still have their money in bank accounts that are just earning very minimal on the dollar. The high yield savings accounts now are earning somewhere between 4 to 5% according to bank rate. So if you can get absolute interest on your money by just letting it sit in the bank, let's do that. Let's move those monies. So that's one baseline way of looking at investments.
Absolutely. We're looking at some of the other tips here on screen as well here. And one of the areas that you tap into is locking in short-term rates with CDs and T-bills. Why is that?
So I just talked about high yield savings account. That rate can change daily. But if you want to lock in something short-term, certificate of deposit, CDs, also known as, it could be another tangible way of getting that interest for a longer period of time within a short period of time.
I want to get personal for the Gen Zers, the millennials out there like myself that are trying to figure out, okay, I'm blocked out from buying a house right now. I'm paying higher rent in the near term period of time, and I'm still paying down student debt as well. So for the Gen Zers and the millennials out there in combating where inflation is remaining the stickiest, especially on that services side, what are some of the tips that they could perhaps employ?
I'm sure particularly for college students saying, I don't want to have a roommate anymore, been there, done that, but maybe for the next decade or so, you might have to share those housing costs. I mean, there's been conversation about housing inflation, rents being around, over $2,000. You got to earn a lot to be able to live on your own. So that's a sure way to continue to cut costs. And I'm going back to savings, retirement as well too. Put $25, just something to get you moving forward, because you don't want to be at Gen X's age or Z's, looking at, I wish I had set aside some money.
Right. Lastly here, we talked about, and we set this up, teasing the tips for retirees out there too. They're trying to figure out, even where inflation is remaining sticky right now, how they can make sure that their retirement savings don't get eroded as well here.
That's a tough one, because once you're in retirement, you're living off of your nest egg. So what's going to be important to make sure your allocation looks great for what you can handle. And that means still having stocks in that portfolio. Stocks over long periods of time have outpaced inflation. And so that's going to be an important consideration, because people are living like 30 years in retirement.
Are people asking you, and I got to throw this your way, because there's so much focus right now on meme stocks as well, as we've seen a resurgence. Are people asking you how much of their portfolio they should have exposed to meme stocks at any given juncture, anticipating perhaps or hoping for a pop like we're seeing?
So people who are afraid of inflation should be absolutely afraid of meme stocks, right? Because there's more risk with the meme stocks than there is necessarily with managing inflation. I mean, we're talking about, now 3.5%, but when you're talking about dips that could happen on the downside of the meme stocks, that could wipe away a lot of wealth.
Yeah, an island reversal. Everyone should fear that, especially when you're looking at a stock chart like that. Lazetta Braxton, who is the Lazetta and Associates founder and CEO. Thanks so much for joining us here.
Thank you for having me.
Joining us from Chicago, all the way in town from the Windy City. Thanks so much.